Despite gold struggling to break out of its current range, it's up close to 27% year to date. And the market is converting a lot of previous bears, including our next guest, who says he is bullish on the metal now more than ever. Craig Ferrantino, president of Craig James Financial, joins me now. Greg, so happy to meet you. Good to have you on the show for the first time, Craig.
Thank you.
So let's talk about what led to this conversion, if I can call it that. You weren't so bullish on the metal before, but now you say you're liking gold perhaps more than ever.
Yes, and it all starts with my theory on interest rates. So once you start to think that if you believe that interest rates are going up, which right. I've been hearing that for so long, interest rates are going up. Meantime, they're going down with a 10-year treasury 1.5, 1.6. As they're going down, the demand for gold is going to start to increase. And if you look at some of the major U.S. global economies, you'll see that there's so much that are 500 million people now are subjected to negative interest rates. You think of the ECB and then you think of Japan. These people are investing millions of dollars to get less than that in a return over the course of a year. So that's going to add some buying pressure to gold. And now that's not just the one factor, but that's the main factor. Yes. Declining interest rates, I don't care what you hear, declining interest rates, I think we get them coming up. They're not going back up. It's going to be down.
Despite a lot of people thinking that the Fed will raise rates now.
That's all I hear is that every quarter,
right.
every
Well, they were happy with the jobs report. Right,
they were. It was a temporary thing, though. When you look at the quality of the jobs, people are realizing that the jobs report numbers may not be what they are. So I think there's a concern for people. In the meantime, there's a demand for treasuries. Why, if the jobs report so well? So if we think that there's a long-term trend, again, you got to look at like a 30-year trend. You'll see interest rates continuing to go down. If that's going to happen, then I'm a big buyer of gold because I think gold's going to really, really do well. It's not just interest rates, though. It's also because we have geopolitical risk. We have like this Mr. Robot effect.
Right. I was going to ask you. I love how you talk about this Mr. Robot effect.
Yeah, well, there are people that think that the world, the hackers are going to get into the world economy. We see people hacking the Democratic and Hillary Clinton's emails, and that this effect. What else could they be doing? They'd be going into our banking system and foreign banking system. The biggest theft in history was like an Indonesia bank just a few months ago, and people actually hacked the bank. So that's the Mr. Robot effect, that we think that there's this doomsday type environment.
But let me ask you, Craig. So we've heard these arguments. People who are bullish gold will say, well, look, they look at low interest rates, they look at the global uncertainty. But when do you think we'll expect to see gold move out of this range it seems to be in? Like, yes, we've rallied a lot in 2016, but now should we be moving higher?
Yeah, I think you still go higher from here. With the funny thing, it's a great question, but I think you go higher from here because it's unlinked. It seems to me it's unlinked to the value of the dollar. We know that the dollar has gotten very strong. That's good. The U.S. economy is doing well relative to other economies, but you don't have that in Europe. And so a good portion of the world doesn't have this great economy. And so I think that also increases interest in buying gold. And I know there was a report that said that the people who buy gold jewelry is coming down recently.
Right. Well, World Gold Council put out a report today saying they expect India, second largest consumer of gold, to be buying less because of the high prices. Could this weigh on the metal? But as you said, there's a lot of factors to look at.
I think there's still a lot more headwinds with the low interest rate environment. I want to bring up increasing oil prices. There is a better correlation between gold and oil. And as oil increases, gold goes up. And then you got the backdrop of the geopolitical risk, of course, the United States elections, the Mr. Robot effect, and all these other countries like Iran and everything else.
Do you have a forecast of where you think we'll end the year for gold?
I'd see it at around, I would say 1800, 1850.
Wow, so a big rally from here.
I think there's a big rally from here, absolutely.
Wow, Craig. Well, thanks so much for stopping by. I appreciate it. It's good to meet you.
Thank you. Good to meet you, too.
And thanks so much for watching this edition of Kitco's Gold Report. We have Fortuna Silver CEO Jorge Ganoza coming up next.